Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. An interesting bearish below-the-stomach pattern yesterday that followed on from the previous two-day pattern of a bearish descending hawk, coming as it did just after we had a dead cross of the declining short-medium moving average, currently 73.76, down through the slower declining medium moving average, currently 73.82. I suppose with all that going on, it was no surprise that we had such a bearish pattern. Anyway, prices dropped down through the support of the two 50% Fibonacci lines, the recent one at 71.84 and the larger July 21 to June 22 move at 7200. There was then a free area until the lesser Fibonacci lines at 70.90 and 70.75, which, to be honest, really didn't do anything. It was only the old neckline, currently at 70.35 of the late December 21 to start of March 22 head and shoulders top, that for some reason the market stopped for and reverted back up to close over the lesser Fibonacci levels. Yesterday's action supported the targets below for the big March to early June ascending triangle. Primary target X for that would be in the 66.58 area, and a secondary harder to get target X1 would be in the 63.80 area. There's also a double top formation, even Eve type, formed from March to date. This has a harder to get secondary target X3 in the 66.35 area. Finally, with a close so low down, the market verified that last month was a monthly key reversal down, or in reality, an immediate countering monthly key reversal down. And so far today, well, a higher open and a brief effort on the upside before prices once again pushed below the lesser Fibonacci levels towards the neckline, and once again have been shied away from testing it, moving back up over the lesser Fibonacci lines. German DAX futures. A second bearish black crow yesterday as the market tested, pierced, and I suppose managed a limited close below one of the two uptrends. The October 2020 today uptrend, currently at 12.811, was pierced and closed below, and the May 2020 today uptrend, currently 12.676, was just pierced. Further down, a little under the V bottom low from March at 12.425, we have targeted X2 in the 12.240 area. This is the possible bear flag pattern target formed over the last 3-4 weeks. Finally, on top of all this, we have finished June with a monthly key reversal down. So far today, a slightly higher open over the breached uptrend, but then prices have dropped down again below both uptrends, though not maintaining the immediate bearish incentive, it seems, as today, well, today is looking like a possible hammer pattern. USC Mini S&P futures. A possible hammer pattern yesterday. I say possible as I'm still not sure about it, and I suspect with today's action so far, neither is the market. The top side was capped by the lower tight, currently at 38.23 of the old broken January to March bearish shift pitchfork. Now, I know this pitchfork has been broken and the bearish Andrews pitchfork is the one that is running the market, but please remember the times crossover of these back in mid-May and early June. Then perhaps you will see why the echo of this broken pattern still resonates. I'd highlighted the crossover times from these two pitchforks as periods where one could expect one or more of the following: a volatility, a change in trend, or a reinforcement of an existing trend with red circles on my daily chart. For your information, next crossover, indeed the last crossover of these two patterns, should they not be usurped by some other pattern or action in the meantime, would be on the 12th of August. Now, there is one other pattern I'd like to draw your attention to, and that is labeled late March and late April today possible bearish halfway hesitations. I've detailed two separate patterns as there is an argument as to where the pattern should actually start from, and that's assuming the pattern works in the first place. And therefore, target X is for the pattern originating in April and is in the 35.55 area. Meanwhile, the lower target X1 is for the pattern originating in March and is in the 34.20 area, just off the bottom of my chart. Now, so far today, well, a lower open, then a dip down to yesterday's low, but not quite reaching it before the market pulled back up, and it's currently looking like an indecisive doji cross. The next supports are the March 2021 low at 37.20 and the February 2021 low at 36.56. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.